You're seeing a sharp cut, over 2% gone on the Hong Kong markets.
The data gave you the top line number, 263. 275 was the estimate. So in and around there, not much really to worry the markets. There was the revisions were up 11,000. Average hourly earnings still strong, 0.3%.
India has outperformed both in terms of currency and equities by a large margin.
Veteran investor Vijay Kedia has invested in Atul Auto, where there is a total 115 crore investment via preferential issue, out of which Vijay Kedia's contribution is about 100 crores.
190, a fast-changing screen, at least on the index level.
India has been a relative outperformer in the overall emerging market space.
We had current account deficit going up to about over 5% in December 12th quarter.
Both the boards today have approved selling their non-core assets.
Tata Motors is the biggest Nifty loser today after the Q2 JLR sales failed to impress the street.
The rupee had to start lower because it was a triple whammy day. Crude prices higher, dollar stronger, and US yields much higher than what it was.
As we speak, we've climbed above that 17,200 mark.
Well, that was the day so far. Hello and welcome to a fresh new edition of Closing Bell. I'm Prashant. With me, my colleagues Reema Tendulkar here in the studios and Nigel D'Souza on the newsroom floor. Guys, hi. I mean, outperformance and more outperformance. What can we say? But outperformance, I mean, this is incredible, isn't it? Day on day, week on week, month on month, and of course, year on year as well, it continues. Look at the market right now go. We are down 112 points, which basically translates to 0.6% cut. This comes after a near 4% cut in, what is routinely described as the mother market. I mean, I don't like that term, that phrase, but the big market, right? Off of which most other global markets take their cues. 4% fall, and you're off with just a 0.6% cut here. So it's just been incredible. But this is something which we've kind of gotten used to, right? This is something we explained in the morning as well. The impulse was very much there on Friday as well to try and buy the dip. Going into a big data point like the US jobs data, on Friday, and I made this point in the morning, the market closed nearer to the day's high than to the low. Now, you could call that bravado. Things could have gone south, but they have not. And what has happened in the past has happened again, which is that the buy the dip phenomenon has worked. We've come off the lows quite strongly, and we're down just 100 points, 0.5% in the face of a massive global sell-off. So I think that's extremely, well, you can say it, heartening, perplexing, puzzling, but that is what it is. Flows number should be interesting to watch later today, both DIIs and FIIs, especially on a day like today. The Nifty low today is 17,064. By the way, market has given up 50 points from the day's high, but that's okay. We are up more than we are down from the high. 17,064 becomes an important point. The day's high is just under 17,300. 17,280, I think, is the day's high. 17,300, by the way, is nothing but the 61.8% retracement of the full rise from the June lows to the recent high. So, the level to take out would be 17,300, immediate level on the upside. And on the downside, I think the day's low would come into play. IT stocks, and I was making this point in the morning, going into the earnings season, despite the NASDAQ fall, the 4% fall in the NASDAQ is bid. I mean, the index itself is up about 1/3%, and actually more, 0.6% now. And TCS will kick off earnings season later when we report. Reema, hi.
Hi, so the Nifty IT index has recovered 2.5% from the day's low. It's been rallying for the last 4 days. So in the last 4 days, the Nifty IT index from its close to current levels is up close to about 4%. The point is, just look at the way the positioning is. The positioning in the Nifty IT stocks is very low. The earnings expectations are also very muted, unlike, say, the banking stocks, where expectations are running high. So when the expectations are low, there is always a higher chance that the companies, even if they meet expectations or they marginally beat, there is a possibility of an upside. And I was looking at the way the FI holding in the large cap IT stocks have come off in the last 2 years or so. And if you could get those numbers up. So in TCS 2 years back in the September quarter, FI holding was 16%. It's down to 13.5%. Big fall seen in HCL Tech's FI ownership from 25%. It's down to 18%. Only in Infosys, the FI ownership has remained fairly resilient. But the point is that most of the street is bearish on the IT stocks, which is why the Nifty IT index is down close to about 28-29% on a year-to-date basis. So when expectations are low, even a small beat can do wonders. So that's what we're going to be tracking on the top line as well as on margins, particularly for Infi, which reports numbers on Thursday. Watch for a buyback announcement because the company is eligible to announce a buyback. The cool-off period for a buyback ended in September. So if they want to do a buyback, now is the time. And there is another compelling reason why Infi may announce a buyback, because their cash flow return policy states that 85% of its free cash flows over FY20 to FY24 will be returned. That's their stated policy. But they have managed to return only 73% till FY22. They need to bring that number up, and they only have 2 more years, which is why the street believes there is a high probability that we could see a buyback. And again, let's, as we start this week, let's put up the earnings calendar up. A lot of IT, but throw in Bajaj Auto, Shree Cement, now not a Nifty company, but Shree Cement also reports numbers on 14th, and on Saturday, 15th of October, will be HDFC Bank. And of course, a lot about the IT stocks, Nigel.
Well, that's right. Hi, Prashant. Hi, Rima. You guys are talking about the outperformance, right? And the Nifty is doing pretty well. I think we should get the intraday chart up for you on the screen. And, the reason that the Nifty is doing pretty well is because the Nifty Bank, it seems that the bulls, they want to defend that mark. And they want the Nifty Bank to hover around the 50 DMA, which comes in closer around 39,100 odd. So the Nifty is outperforming, but the Nifty Bank is even outperforming that. It's down only around 0.3%, while the Nifty is on closer to 0.5% odd. And that's the one that's really bucking the trend. So even in Friday's trading session, we did see it went down to around the 38,800 odd. From there, we saw a bounce trade, went down to around 38,600. And from there, we got a bit of a bounce. As I said earlier today, that seems to be the joker in the pack, though for the time being, till we see some bit of a pullback on the Indian rupee, or till we see crude oil prices, see a correction of a few percentage points, only then the bulls will be feeling reasonably good. Otherwise, at higher levels, we are seeing some supply that's coming in there. Let's see how the final 60 minutes does pan out. But first up, let's run you through what all we have lined up on the show for you. It's a weekday on the Lal Street with the key indices clocking in losses of nearly around 1%. The consistent underperformer of the day is the mid-cap index, autos, banks, as well as pharma. Well, they as well drag in today's session. Tata Motors, the biggest loser on the Nifty today. The weak JLR sales for September on the semiconductor shortage, even as demand for its key models remained very strong. Analysts see this delaying Tata Motors' deleveraging strategy. Details lined up on the show. Bandhan Bank also slides in trade. This on the back of a tepid showing in the second quarter. We'll get you a glance into those numbers later on. And the stock of India Bulls Housing Finance, it hit lower circuit intraday. This after the Enforcement Directorate moves the Apex Court to challenge the Delhi High Court's order of quashing a probe against the company. We'll get you the latest updates on that front as well. And finally, Sridhar Bhattacharya of Edelweiss AMC will be joining in to talk all things market, as well as how we see things shaping up. Let's see how the final 60 minutes move on. All that and more on Closing Bell.
All right, so that's a lineup here and what's coming up. Well, let's tell you how to position yourself in the last hour of trade. Mitesh is here to help us do that, help you do that. Mitesh, good to have you here. So, the dip's been bought and so far well behaved with a 100-point cut. What would you do?
Good afternoon, Prashant. I think you were highlighting the contribution of Bank Nifty. You can add Nifty IT to it. I think those two indices still look pretty okay to me. And that is why the Nifty possibly, did not break below the 16,980 zone, which is the 200 average area. So we got a low of around 1765. But I think, very clearly this zone of 17,100 to about 16,980, I think till that has been broken, I would not want to go short on the markets. On the upside, I think, yes, again, 17,280, 300 zone needs to be taken out before you can venture out on long. So it's a market which is, kind of trying to find its directional bias. But looking at the Nifty IT and Nifty Bank, I have a mild positive feeling that, eventually we could see a break on the upside and head towards 17,450, 500 zone. Having said that, I have a buy on HCL Tech, and traders can possibly look at a stop loss just below today's low of 942. So 941 is what I recommend, and a target of around 980 on the upside could be tested. And I had a sell on ITC a few days back. Again, I think it's on the verge of possibly giving some kind of a corrective pullback. It needs to break 325 though. So sell below 325, then keep a stop at 330 and look for 315, 314 as the first target. Eventually, it could possibly give a pullback to about 308 levels.
Mitesh, thank you very much for that. We'll come back to you. Despite many multiple punches thrown by the US markets at us, we're down, but there hasn't been a knockout punch. We're just down about 0.5% on the benchmark indices.